All right, got the tweet out. What's up, Rick? Kevin? How's everybody doing? How's your guys' Mother's Day? Honeybee, hello. We just give it a few minutes so people can kind of get in here. We typically don't start till 2 p.m. my time, 5 p.m. market time. So just a few more minutes and we'll get this started. What's up, Yogi? No golf this weekend for me, unfortunately. Well, that's a lie. I went to the chipping greens the other day just to chip around. Nice, Rick. Nice. Got a lot of names on the list this week. I will try to just move through them pretty quickly. I don't want this to be one of those hour-and-a-half episodes. I feel like the shorter we keep these, the better, especially for people's attention spans that they tend to have nowadays. What's up, Josh? Saw your tweet. That was pretty funny. Love that you're making some pork belly burnt ends. That sounds absolutely amazing. I'm making tonight. I'm making a kalbi, which is like a Korean version of the short rib, like a beef short rib. So, been marinating them since last night. They are going to be really good tonight. I hope you guys all had a really good week last week. I think we have a really pretty busy week ahead of us this week. What's up, Sam? If you guys don't mind, we'll start in just a minute, but if you guys don't mind, either create your own tweet or retweet the tweet I put out or share it on Instagram or wherever you guys have a social media account set up. We definitely would like to get more and more eyes on this and try to grow the reach of these Sunday preps. What's up, High Trader? Yeah, so if you guys could just do me that solid, and we'll get this thing started here in about 30 seconds. And get a sip of water. Awesome. So, welcome to the Sunday Prep, guys. This is May 8th. It is we're going into the second weekend of May. This is Mother's Day. And funny enough, my mom is actually in town visiting me and the grandkids. And she has not seen the grandkids since before COVID started. So my youngest kids are 3 and 5. And so like the last time she saw them, they were 1, maybe not even 1 and 2, 1 and 3-ish maybe. And for anybody that's got grandkids, you could probably attest to the fact that not being able to see the grandkids as they're going through those ages is like pure torture. My mom was like losing her mind. So she is absolutely ecstatic to be down here and being able to see her grandkids. And we went out today for Mother's Day. I set up a family photo shoot, portrait type thing, which is, I'm still all dressed up from it or whatever. But these are the kinds of things, guys, that help to put everything in perspective. Like, you guys have undoubtedly heard me say this a million times, and I will continue to say it until each and every single one of you gets this point. We work so that we can live. We don't live to work. You've got to understand there's so much more stuff out there that is much more important than just what you do for a living. Yes, trading is, what we need to try to work on and hone our craft and come as close to mastery as possible, which we all know you'll never master the markets, but we need to also find balance. And I've gone from one really far end of that spectrum, which was spent every last spare minute studying anything I could, reading whatever I could, watching whatever I could, to the point where it was not healthy, right? It was, if I was awake for 16 hours a day or something like that, I would spend 15 of them staring at charts or videos or reading about markets. And the opportunity cost of doing that is life passes you by. You neglect the other things in your life that are truly important, like family and friends, and taking care of your own health as well, whether it's physical health or mental health. You must find balance. It can't just be about the markets. I usually do these Sunday preps either Friday after the market closes, or I try to knock them out on Saturday, and then I come here and spend about an hour chopping it up with you guys. But for the most part, my Sundays, other than filming this, are completely turned off. Like, I don't stare at charts. I don't watch the futures. And even Friday or Saturday after I do knock out the prep, that's it. There is no more market talk or work during the weekend. And if you guys follow me, you understand that, I trade the opening 30 minutes. And then I'll spend another 30 minutes on the Zoom call with the guys at TT. And I'm talking, like reviewing the trades we took, reviewing other people's trades, just talking about the general consensus of how the morning went. But after that, I'm gone, guys. I'm at the golf course, or I am at the gym, or I am spending time with my kids. And when I realized the importance of finding that balance and started actually putting my effort into that, my life improved exponentially. And I really, really want you guys to understand that. So, like, yes, Mother's Day it's a big day. I hope you guys all did something really special for your moms, or if you're married with kids, you do something special for your wife, or if you are a female trader and you have kids, I hope your family has done something special for you today, because our spouses, like, for me personally, my spouse is you can't put a price on the value she brings to the ability for me to do this job, right? You absolutely need the support of your significant other. You need your family behind you. This is a very tough career that we have all chosen, and it's an up and down roller coaster, right? So everybody treat your moms right. Remember the things that are important in life, and don't get caught up focusing on the BS, guys. That's really just the message for today. I hope you guys have a great Mother's Day, and we'll just knock out the rest of this prep real quick so you guys can get back to that, all right? So, as always, neither I, True Trader, or any of its representatives are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell any stocks. It's simply for entertainment purposes only. All right, here we are with the ES, guys, and as always, we start with the broader market, and then we'll drill in to the more nuanced things. The broader market, I always use the ES. You can use the SPY. But this is basically how I start to make my plans for the week ahead, right? So I usually start at the monthly chart, and I kind of work my way into the time frames. I'm actually going to start with the daily chart right here, and the reason why is this. I kind of think we're oversold a bit. We had two really big sell-off days. If you guys traded Thursday and Friday, you remember, like, the opening hour of the morning was very heavy selling, right? And I think when you get this type of selling, it really gets people thinking, that we've got to find a bottom soon. This must be that capitulation. and that this is going to have one of those bear market rallies really soon. So what I wanted to point out was, like, understand that, you know, what you're looking at on a daily chart isn't what every trader looks at. There's a lot of people with higher time frames, a lot of people that will focus on bigger pictures. And when you look at the weekly chart and see the weekly candle, you start to think like, okay, maybe we're not going to have a bear market rally immediately, right? Because as in terms of weekly candles, this last week's candle is disgusting with that giant wick on top, and it's still a red candle, and we just made new lows. Like, so here's the thing. This is what I wanted to kind of get out of this part of the prep, is that I may be wrong. We may have that bear market rally, but I kind of am leaning towards thinking a lot of people are expecting it, and I think we may actually just, you know, gut check everyone and head lower. And I think early on this week we could see an actual capitulation. And I don't know if we do or not, but the reason we always talk about these things is because regardless of what happens, we have to make a plan for each scenario, right? So whether or not we capitulate further down, you know, I will be ready for everything. And so obviously, as far as support and resistance levels go, this is a 5-minute chart, and only reason I pull up a 5-minute chart is to show you where some of these support levels come from. So you have the little pivot low from later in the day Friday, right? I'm gonna watch that. If we open flat or gap up slightly and then we flush down into those levels, I do want to know if we start to see buyers right in there and we start to bounce. If not, it's fine. The very next level is the same day's low, the low a day from Friday, which was that heavy sell-off that we saw in the morning, right? I was talking about the opening hour of both Thursday and Friday had some very heavy selling. You know, we had almost a straight V bottom recovery, but then rolled right back over, right? So, you know, if these two levels don't hold, let's go back to the daily time frame here. There's nothing really below us except there is these lows from May of last year, almost a year ago, right? The lows are just around that 4,030 level. So I'm not sure that level is going to be that significant. What I would be considering a better level to be watching for would be that 4,000 round psychological number, as well as the annual pivot that's right above it, right? So we lose last week's lows. That 4,000 area is going to be probably the first area in play for me. Let's go back in here, and so resistance. The first resistance level is going to be, you can see the tops from Friday, and you know, again, I'm not looking. The alert's not set where I want to see resistance. The alert is set ahead of the resistance, so I can get alerted before it gets there, right? Look at what the resistance was, almost to the T, right? It's that quarterly pivot, 41.52.25. And if you zoom out a little bit, you can see how significant this level has been for all last week, right? So it was resistance, 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 come above it, support, support, get back under it, resistance, resistance, resistance. So that's the first level. I'm going to have be looking for fades on any kind of spike up into those levels. Again, we don't know if we're going to gap up or down. If we were to gap above it, I would definitely be watching for it to act as support if we test it from above. Above that, you got this 41.88 level, 41.90. You can see there was quite a few times when that was acting as resistance and support as well, right? I like, if you guys haven't been following these Sunday preps, one of the things I like is to see levels that have been tested a lot of times. You know, if something's just tested once, right? Like, actually, this isn't a good example. This is tested twice, but the less it's been tested, the less weight I'm going to put into it, okay? That's just me personally, just in case you guys were wondering. And then up here, where we had this big gap down from, and well, I say gap down because if you were looking at the SPY, this would probably look like a gap, right? But because this is the futures contracts and they trade overnight, there was actually price action on that move down. But that resistance from right before that's going to be the next spot of interest for me for resistance. and then up right into that 4,300 level is the last level. I don't know if we're going to get up there this week. You know, it's hard to say, because if we do have a bear market rally, you guys have seen a few of them now. You've seen they can move fast and far. In like literally one day, you could get a giant green candle. So like, you can't rule these levels out. You better be prepared for them, because if you only plan for the levels that are really close by and you get one of those bear market rallies, you're going to regret not having done the homework first. All right, so that's pretty much the ES. We're going to flip over to the NQ, and it's obviously not much different. You'll remember we talked about this level, this 12,250 area. It's kind of a range, right? 12,250 up to like 12,500, which was significant a few times way back, right? So resistance, and then support, and we have never tested it again since, and this is the first time coming into those areas. So that's one key area of support for me, as well as the same as what we talked about on the ES, which was those lows from Friday, the significant lows, which were, let's just call it 12,500, and then of course a little bit lower. Actually, it's still going to be 12,500, even that other low from Friday. Above that, you got Friday's highs, as well as those levels of resistance from Thursday, and you can see they've been tested plenty of times. We've had a lot of price action in those areas, and then above that, you have this whole range that just acted as resistance earlier in last week, which is going to be, we'll call it 13,160. Above that, this weekly pivot from last week, it's not going to be a pivot this week, but it's going to put us close to being into this downtrend. Let's see if I can, let's pick a different time frame. There we go. So, you know, any spike up into this area is going to be very interesting for me personally to see if this trend line wants to hold. Yes, we kind of broke through it right here, but you see that this white line here is my 20-day on the 120-minute chart, superimposed, right? So I always like to know where the 20 days at, no matter what time frame I'm looking. I also want to know where the 20 SMA is on every single time frame, right? So hopefully my charts aren't too confusing for you. Yeah, I think I don't change my charts. They've been this way. So if you guys have been watching these Sunday preps, hopefully they're starting to look familiar to you guys. So let me get back to this. Again, I really think that that weekly candle is just horrendous, right? So we'll watch to see if we roll over further, if that 12,250 area holds. Below that, it could get dicey, right? There's not a lot below that before 11,000. It just is what it is. And welcome to a bear market, guys. I mean, like, I think people keep acting like this is a surprise, and you know, the only way that this should surprise you is if you've never studied historical charts, because there have been past bear markets where you have the ability to go back and see what has happened in the past, and it should help you prepare for what we're going through now. Let's look at Bitcoin real quick just to see what the cryptos are doing. You can see it's been getting cornholed. There's one last level of defense down here at this 33,000 level. Below that, nothing till about 30,000, and you know, below that 28K kind of area is, I don't see how that's not going to trigger a lot of panic in that market. I don't think bulls want to see this under 28K. We'll see what they can hold this week. Let's see if they hold first off the 33,000 level. That should act as pretty good support. If it doesn't, 30,000 is next in line, and then 28. Those are the levels for me. Above on the upside, we got that 37,000 level, which we were hoping. Well, the bulls were hoping. I don't know why I say we're. I don't even trade crypto at all. I trade the equities, but I think the bulls were definitely hoping to hold that 37,000 area. So now that they lost it, I think the first test on the underside is probably going to act as pretty good resistance. And then below or above that, you got the 20-day. So that's the broader market. We're going to jump into the sector analysis now, guys. This is barchart.com. You can go into stocks. I'll show you how to get here in case you don't know. You go stock market sectors, and then you just change this to the short-term matrix. And this basically shows you just a bird's eye view of what's been happening in each sector over the last week, month, and 3 months, right? So you can see energy still just one of the ones that is in absolute beast mode. Obviously, not all sectors are going to perform poorly during a bear market. Typically, you'll see utilities do pretty good, consumer staples. Some sectors perform very poorly during bear markets, such as consumer discretionary, which you can see is, right? And it makes a lot of sense. What is consumer discretionary? It's excess money people have to spend on things at their discretion, just things that they want, like materialistic type purchases. And when money gets tight, those are the first things that get cut from the budget, okay? Let's see, what was the one that was it was one that was, I can't remember which sector it was. Oh, it was the real estate. Yeah, I just wanted to point out real estate has been getting kind of hammed up. And if you guys follow real estate markets, interest rates have been going up. I just bought a house and we got lucky. We locked in a rate right before they started raising them. And I am kind of interested in real estate, and I am watching this closely to see if the actual real estate market, if some of these things we see in the stock market are actually red flags that translate to that actual market. And but let's just look at the sector ETFs like we always do, and we'll peel them back piece by piece. Retail, heavy, ugly, not what you want to see if bulls are starting to build a case for a push, right? This is just lower high, lower low. I still think all pops back into resistance are great shorts. If I was looking for this thing to be a long, it would really have to capitulate a lot further. It's not that oversold right now. Sometimes you will hear me talk about a sector that's ugly as all sin, but it's definitely just oversold, and I can't really bring myself to get super short when I think there's going to be a near-term bounce, right? I can't say that about retail at the moment. Finance, the financial sector, same thing. I think all pops back into resistance are very good short opportunities. This was one of the later one of the latter sectors to start to roll over, right? Some sectors started the bear market ahead of the broader market. Some were kind of laggers. This one really didn't start rolling over till it was much clearer that the broader market might be in for some turbulence. And it's, again, this one's not oversold either, so I wouldn't say that there's too many things I'd be looking to long in this sector. Here's the real estate, just in case you wanted to take a look at it. I don't trade the real estate sector very often. I don't want to say never, but very bearish looking. Just made some new lows right here after making a lower high. Will it come down to that monthly 20, which I can show you on a monthly chart? I don't know. If it loses the lows under that 43 level, it could unwind quite a bit further. Healthcare. Again, we talked about this level last week as the 125 area, which is what bulls really need to hold if this is going to stay, somewhat bullish still. It's obviously it's way off. It's not way off. It's pulled quite a bit back off the highs, but until we lose that 125 level, this one's not quite broken yet, right? Especially compared to a lot of the other sectors out there. Building materials, industrials. Industrials looks like crap compared to the building. Actually, building doesn't look that bad either, but I don't trade really anything in this sector, almost never. The material sector. Utilities, remember we talked about this one. It's still holding this level here, which that's what, if you're a bull or if you're looking to long names in this sector, that's the level you want to see hold, because that's a retest of the recent breakout, right? We broke out. That's been a very long-term level that it finally gets above. So this is the first major retest of that level. If you're bullish on this, that's the kind of thing you want to see hold. This is a beautiful chart, like especially this weekly chart, just walking up the 20-day or the weekly 20 SMA, higher highs, higher lows, higher highs, higher lows, just complete trend, right? That's what you want to see if you're bullish on a sector or on a name. Consumer staples still looks really good, as it should, right? And what I do like here is that this big pullback after the bounce basically put in a higher low here, that if we get back above Just call it 78.50. That's going to be, you know, what could spark this for a push higher. Let's look at a weekly chart on this real fast. Yeah, it's also right into the weekly 20. So this is very constructive still, even if it were to lose that, right? You still have this uptrend that's definitely still intact. So anything pulling back into 73.50, I still think it's very bullish on this. If we were to lose this trend line and you know, have one of these pushes higher, stuff, not make new highs, and then roll over, then maybe we could start having that conversation about what's going on in the consumer staples sector. But right now, everything looks great still. Consumer discretionary looks like trash, right? We talked about that. Spike up, lower high, and then just wash out, new lows. I think we're coming down to this 150 level. If we get down there, I may look for names in this sector for a bounce. But I'm going to stay very, very nimble on things in here because it's consumer discretionary and there's a reason for it to expect it to stay ugly, okay? Communications. Still pretty ugly. Did not, you know, it's still possibly making a higher low here until we take out this 58.50 area. But I don't expect this thing to start making higher lows and higher highs. The broader market would need to turn around first. I think we would need to first build a base, at least for any push to be healthy. This one really surprised me this weekend when I checked it out. Biotech just straight up right through that trend line. Like next stop's probably 65. It's just really ugly over there in the biotech sector. Nothing I'm watching from that sector. So again, I think there's a lot of names in this sector that are trading below cash, and you know, when the time is right, there's going to be some really good opportunities in this sector. But at the moment, no. Okay, that's pretty much my takeaway from it. Technology still really ugly, still making new lows, still has that super ugly weekly candle, just like the Nasdaq did. I'd be looking for this 130 area. We'll see if we can get down there and then maybe start looking to get long on tech names. Energy and oil I still think look good, and that's pretty much it. Like I said, I don't want to spend too much time on this stuff. Basically, the way I use the sectors is I try to identify where it's going to be the safest to put my capital to work for long ideas, and where it's best to keep my hands off, or where it's going to be best to put my capital to work for short ideas, or where it's going to be best to keep my hands off, right? So if you want to be long a name, hopefully it's in a sector where money's rotating in and the sector overall has strength, or that sector is extremely oversold and you're looking for a near-term bounce. I just want you guys to understand the concept there, right? So let's get right into the ideas, because I told you guys I have a lot of them this week, so I'm going to try to fly through them. And the first set of ideas, as always, are long setups. I'm looking for strong stocks where I'm looking for continuation. Okay, so the first name on the list this week is BTU, and what do you know? That's an energy name. We just talked about using strong sectors as ways of identifying possible names where you would want to get long. So BTU, what am I looking for? I'm looking for 19. Now, listen, I actually kind of struggle with putting this name in the strong stocks looking for continuation list, because there's an argument to be made that this isn't strong anymore. That's a big sell-off after the big push up into 33, right? Most likely blew some people out. But when you start to zoom out and look at this chart, 19, like, look at this, guys. Hopefully you see this. It's a retest of that breakout spot. You also had the low on the pullback. You got this breakout, right? It pulls back, makes this pivot low, and then we're off to highs. This is the first time pulling back into these levels. I really want to be watching that 19 level. All right, guys. It's the annual pivot. It's going to be close to your weekly 20. I'm just thinking there's going to be some support in there. You're going to get a decent bounce. It trades plenty of volume, $2.50 ATR. You know, and remember, ATRs are averages. There's days when the thing has a 4 or 5 point ATR or range on the day. So I like this name. It's a good trader, and I will be watching it. Next name on this list is Philip Morris PM. Again, consumer staple, guys. This is a sector that's been strong. Why would I want to know that? Because if money's there, the big money is what moves markets, guys. I don't want to be long names where big money's not participating. So what am I looking at on Philip Morris? I'm looking at playing against Friday's lows. So basically you got the 200-day, the 50-day, the quarterly pivot right there. And we sold off, with the market. The market was heavy, but you get this nice wick on this candle to the downside right off that 50-day, 200-day quarterly pivot. And depending on where we open, I'm just going to be looking to play this on an early flush right down into that 98 area. If it doesn't hold, I very well may watch to see if we get a play against that 96.50. But I do want to be watching this name because the sector, right? This is consumer staples. It's been strong. You can see we've just been higher highs, higher lows, higher highs, higher lows, roll over, get a major test, push up. And what I think could happen here, guys, is, let me see if I can draw this. So we get the pullback, you get the push up, a little higher low, and then the break of that level is what should take us back up to here. The break of this level is what I'm watching, right? So if I can get in down here and then ride this up, if part of it stays on as a swing position and we can break above 101.50, you could see this thing at 106 in a 2 to 3 day period. So all that needs to happen is for us to hold these levels down here around 98, reclaim 100, and this thing could start going again. So I want to make sure I'm part of that. Okay, get rid of these lines. Let me get this. All right, next idea on this list is Kellogg. Okay, again, consumer staple, right? And this is a earnings play that had this nice, beautiful breakout on really high volume. You see the volume the last 2 days, Thursday and Friday, right? What I'm looking at is for this thing to just need a quick little pullback, retrace some part of that, get some profit taking, and I'm looking for it to have another day of continuation. So what I'm looking for is to be able to snap this up off this 71 to 70.8 area. Let's see. Yeah, you can just see the tops here. And these tops, this little recent breakout area has not been retested yet. I just want to see a flush down here, see the buyers show up, and I'll be looking to scoop this right off, 71 to 70.8. And no problem if I'm wrong, taking a small loss, but I think this thing has potential. And last but not least, the last name in this list is XOM. And again, oil name, right? Sectors are important, okay? So what I'm looking at on this one looks like it's just starting to try to break out. It's, had a green day, the red day, they bought it up, you got the wick, and then another green day with the wick to the downside. I think the buyers have been just buying this thing on all these dips down here. I think they're going 95 on this, okay? I want this thing to break 92, and then I want to join trend on dips with defined risk. So it's going to be a trend join. This is not your typical, most of the trades I take, like I said, I trade the opening 30 minutes. I'm looking for emotional moves in the levels. This does not necessarily need to give me an emotional move. I would not hesitate if this thing were to just, nice and smoothly kind of push over 92 and then start to hold dips. And I would just get involved with defined risk and let that ride, because like I said, I think this is going 95, and I'm telling you right now, 95 to 96, if it can get there in a parabolic fashion, I'm shorting this name. So not only am I looking to long this name, if you guys see this level here, 95 to 96, if it gets there fast emotionally, I'll be fading this as well. But I'd like to try to get a piece of that long on the way up there. Hope that makes sense. That's it for the long setups on strong stocks looking for continuation. The other type of longs I like are oversold stocks where I'm looking for a near-term bounce. I call them oversold reversion trades. So the first name on this list, and this is actually the longest list I have, is this sector, or this section, okay? So ICE, these guys are buying Black Knight. The deal, apparently the market wasn't really in love with this deal. I want to say it was like 13 billion. Some of it's cash, some of it's stock. I'm not looking at the numbers right now. I briefly remember reading about it on last Thursday, I think. But I am looking to, I'm looking really closely at this 97.50 to 98.50 area. I think we're kind of getting close to this thing bouncing. Now, I'm not here to catch a falling knife. I'm not going to guess a bottom. I'm waiting for the author price to tell me when it's ready. If this wants to flush out and come even lower to like 92s, trust me, I'll be there. And I'm not going to be catching it there either. I'm 100% going to be waiting for this thing to show me something to risk off of. But I think ICE is going to give us a really good bounce play. The next name on this list is CFLT. And I am looking on this one to actually, the plan for me on this one is that this is the low. And so I'm hoping to get any kind of flush down into this 2150, 2170 area to scoop, and I'll be risking on Friday's lows. If it breaks that, I don't mind stopping out and maybe going back to stalking it. But I really do want the thesis here to be that like this put in the low on Friday. I want this to be the low. And so the concept or the thesis here is that this is going to bounce higher. I'm hoping to scoop up a flush and have really nice risk reward on this trade. So that's CFLT. Next idea, CrowdStrike, CRWD. I want this off of 150. I think this is really a no-brainer level down here. You guys can all see this. Now, I don't know if we're coming down to 150 or not. I will keep an eye on it depending on where we open, right? You kind of can see this little, it could just be holding this trend line. Whoops. Sorry, guys. If it's just holding this trend line and it flushes off the open into this 160 area and holds, I may put the trade on and just keep risk under Friday's lows. But if we, can't hold this level, I'm definitely looking for 150s, all right, to get long on CRWD. Next one, EXPE. This thing has been a dumpster fire since the numbers came out, and it was really, really heavy. The day that they reported, which was, let's see, that was, is this Tuesday back here? Tuesday after hours, maybe? The next day, that Wednesday, I think, this was heavy, and I can tell you because I traded it. I watched it. I watched other people trade it, and I was like, dude, there's something just not quite right about the way how heavy it was. I completely avoided it, but that was on this day. We've had how much more fades since then. I'm really, really looking for this thing to find a bottom. 120 has me interested. You can see these lows from back here. Let's see if I can just draw it right in here. Yeah. So any flush down in this 120 area has got my attention. Again, not trying to catch a falling knife on this one. I think there's going to be lots of meat on this bone. I don't think you have to be first one in. Better to be $1 late than $5 too early on this, okay? Next one, PLD. Man, a lot of these names have just been getting smoked, right? Pretty simple here. Looking for 138 is the first level where I'm interested. Again, not trying to catch a falling knife, literally stalking this for the day that's the bounce day, right? Once I see that, try to put something on with defined risk and then let it work. SPLK, 94.50 is what I got written down. You can see where that comes from. This big old sell-off back here, back in 2020, this was the March 2020 sell-off, retest of that. So I'm looking for 94.50 on SPLK. I don't want to touch it really before then, due to the fact that we just lost some really, really key levels on this name. So I'm looking a lot lower than where we're currently trading. And the last one on this list is X. And steel has been weak. Like, you can look at all the steel names. You'll see the same kind of sell-off in them, right? They've all just been heavy. But X is coming into some levels down here. This 25 to 26 area has my attention, but I don't mind one bit getting stopped out on something like this once or twice if it wants, 24, 23.50. You got the monthly 20 is 23.27. So if it wants to come lower, I'll take my shot at 25, 25 to 26, and I'll gladly take a stop and re-enter a little bit lower if it wants to come lower. So that's it for the long setups, guys. Let's hop over to the short setups. This is weak stocks looking for continuation. First name on my list is ROKU. On ROKU, I am looking for 104. You got the monthly pivot and the 20-day. Again, this is one of those ones, like, I would love it at 110. back up into this trend line, and you can see this is the VWAP Boulevard. Completely forgot to plug Scripts to Trade, guys. If you guys don't know about Scripts to Trade, they're the ones that coded this VWAP Boulevard for All Day Faders, a good friend, and they do a lot of our scripts. Great dudes. But yeah, I feel bad for forgetting to plug them. And they do not pay me, guys. Listen, I plug those guys because they bust their ass and they make great scripts, and they deserve it. They deserve for me to give them props for the stuff they've done for us. Again, they do not pay me. So ROKU into 104, no problem at all stopping out if I'm wrong on that and trying to get at 110. Okay. Next idea is Airbnb. I like this one at 143. You can see the monthly pivot 142.74, and you have these recent lows, which when it broke under, that was when we got the big snap. And again, there's a whole week full of really big names reporting earnings this week. So there is a ton of names that I know I'm going to trade this week that are not on this list, because this is not an earnings Sunday prep, right? Like earnings, I don't do them in the Sunday prep because, one, we have no crystal ball or way of telling like how the market's going to react. It just seems like a big waste of time to talk about like, oh, like I'll buy FUBO if it flushes down to 10, but then they beat on numbers and it gaps up, and all that talk about buying the flush down to 10 was a waste of time or whatever, right? So there's a lot of names this week reporting that are not on this. So just understand that too, that one, if they are reporting this week and I talk about them, like there is one coming up, I'll disclaim it, right? I'll tell you, oh, these guys report on this day before or after the bell. That way you don't get sandbagged, right? Sorry, guys. I'm talking this much, my voice or my throat gets dry. Airbnb 143. Okay, moving on. Next one is Neo at 17. Annual pivot, and the weekly 20 is coming down into those levels. I think a spike up into 17 is going to give an epic fade. I don't know if it comes Monday or Tuesday, but this isn't the type of trade where if it doesn't happen on Monday, it's not valid. Like this thing could come lower. It could trade 13, 12, whatever, and then get a bear market rally, and Thursday or Friday this thing slams up into 17. I'll be there for that trade. FUTU under 29.50, which is, you can obviously see this level here, guys. Under this level, and I'm looking to short pops, join trend. Also, if it spikes up into 34, I will be there to fade it too. So two different ways I might trade FUTU. And the last one on this list is Intel. It was on the report, or it was on Sunday prep last week, and this push up into the 20-day just got rejected so quick. I'm looking for another attempt to push up, an attempt to make like a lower high into the 20 days. So I'm looking 46-ish. 45.66 is the monthly pivot. 46 is the 20-day. Anywhere in that area, a big spike up there, I'm looking to fade Intel. I do think eventually we're going to break these lows, and this chart could get really ugly. If you guys remember, I think this thing's coming down to test this trend line down here, okay? So that would put us down into the 39.40 area. And I just want to make sure that I somehow get in there, get my feet involved, and can capitalize on this opportunity, because I think we're coming down to 40, maybe even sub 40 on Intel. All right, so the last section is overbought reversion setups, and there's only one, and it's Oxy, and they report Tuesday after the bell, and I'm looking for 68.75 parabolic tomorrow morning. If this thing oil gaps up, oil strong, we rip up into that 70, close to 69 area, or maybe even in the 70, I'm looking to fade Oxy. And you can see where this line came from. This goes way back, right? Yeah, this is a key level from back here in 2019 actually, and we've yet to get back to these levels. And now it's finally doing that, all thanks to the invisible hand of Warren Buffett. But yeah, that's the plan. Those are the names I'll be watching. Again, there's a lot of earnings names. There's going to be a ton of action this week. So I'm going to real quick look to see if we have some questions. We'll answer some questions, and then I'll let you guys get back to your Mother's Day, all right? Kyle Spack says 4070 on ES was getting defended with all the heavy selling. Big liquidity on Bookmap at 4050 level. If I remember right, it was a 900 block. It might have been that block that moved up to defend the 4070 level. Okay. Bookmap, for anybody that doesn't understand, it's a visual representation of the time and sales. It's a pretty cool tool. I don't use it. I know a lot of people that do. It is nice to be able to visualize where all the big boys were at, which is what Kyle is pointing out. So I appreciate the contribution there, Kyle. Cristobal Cordona says, what about CANG? I'm not familiar with this name at all. Let me pull up a daily. Hold on. Yeah, I don't trade, guys. So here's the thing. One, I never trade anything that is this illiquid, right? It's trading on average 800,000 shares a day, and it's a $3 stock. So like the dollar volume on this is tiny. You know, I have a minimum threshold of 2 million shares per day on average for the last 10 days. And even that gets adjusted by price, right? So something that's $20 probably needs to trade a lot more than 2 million shares for me to get involved. Whereas something that's a $100 stock, 2 million shares a day, and it's meeting my minimum, right? But minimums are minimums. They're not, you know, it doesn't mean that it's sexy. So hopefully that makes sense. Yogi says, NQ last support, March 21 lows, but me feels this is a key level. 12.5 is key. Lost my prior 12.8 area. Okay. Yeah. If for guys that don't know Yogi is a beast on the futures. He trades the NQ quite a lot over at True Trader, and he's very, very good with the way he does that. Yeah, and 12.5, like, I mean, that's pretty much the level we were talking about as well, right? 12.250 to 12.5, that range. Trader John says, thoughts on Amazon and Veru? Amazon, I'm waiting for 2K. I'm looking for that 2,000 level to scoop. We talked about that last Sunday, and it's almost like, even if I didn't want to buy Amazon at 2,000, I feel like it's something that you're required to do. I don't know, like, it's like your civic duty. So I guess I'll just be a good little boy, and I'll do my civic duty, and I'll buy it at 2,000. If I buy Amazon at 2,000 because it flushes down there emotionally, that trade will most likely be expressed through options. It wouldn't be something that I'm looking to you know, scoop up a bunch of common shares of. I may buy some common in my IRA, like very long term, and that's different, right? Completely different strategy. That if I buy Amazon at 2,000 in my IRA, it's most likely not something that I'm looking to stop out of if it goes lower. Whereas if I buy for a day trade using options, I definitely will have a stop. I will definitely have a level where obviously my idea was wrong, and I don't mind taking my controlled loss. Oh, so Cristobal Cordona says, ORC, what about it? Is that a stock, ORC? I don't know. Okay. I'm not. It's another one I'm not familiar with. If you want my technical opinion on it, I mean, there's nothing here for me to trade, other than like if this thing were to have some sort of catalyst and spike, you know, I could see this 370 area or possibly 4 as levels where I might look to fade it, like to short this. But it's, I mean, it's in a perpetual downtrend, right? It's nothing but lower highs and lower lows. There's no reason for me to want to get involved in it, and it's not like I have no idea. It's a real estate investment trust, so it's a REIT. We talked about real estate in the stock market getting absolutely cornholed earlier when we were talking about the sectors. There's nothing here for me. I don't know. One of the things that I usually do, guys, is if you're gonna ask me about a stock, be more specific than just giving me a name. Like, tell me what it is you're looking for, or ask a question about it. But just saying like ORC, what about it? When I look at this, I say, yeah, I would probably short the living bejesus out of it if it gapped up to 370 and spiked to 4, right? But other than that, I don't know what else to tell you about this name. Dan Kircher, DVN, new 52 week on awful week. trade fade? Well, it is oil and energy, right? So this is the kind of name where if it kind of just like Oxy, I would trade this the exact same way I would trade Oxy, and that is any sort of gap and rip where it gets a little bit of parabolic, like that 75 level up there looks really good. And again, no different than the emotional flushes on the oversold things. I'm not trying to catch a knife. Well, something like this, I'm not trying to step in front of a freight train either, right? I would wait for that emotional move, and then to get that knee-jerk reaction, I would look for the pushes back up to be lower highs. And then you could just short with risk over the high day. And if it's going to work, it's going to work beautifully. And if it's not going to work, it's going to stop you out. You're going to have a very controlled, manageable loss, and it's no big deal, right? And that's the way you guys should really look to operate, is make sure your trades are asymmetric. Is there a good risk reward? Which these ones are my favorite when they get parabolic or when they get really sold off, because if you wait for that blow off and then you short the subsequent spike, expecting it to be a lower high, you won't find trades that are much more asymmetric than that, right? And what does that mean? Well, the more asymmetric something is, the more times you can take that same trade and be wrong, and it doesn't matter. Because when you're finally right, you could be wrong 6 times in that 7th one that's right, and you still are hella green. That's just the way it works, and it's the magical math equation of the stock market. I always tell people that. Okay, Stone says, any thoughts on Nvidia? Let's see. First thing I noticed is that, yes, it did make new lows on Friday when we were heavy, but it didn't close below them, so it did reclaim them real quick. But still, though, there is no reason to want to be long this. It's literally still stuck in this downtrend, still lower highs, lower lows. And again, like, I'm not sure what it is, what your question is about it. Like, if you're asking me about, is there a day trade here, or is there some reason to want to start a swing position on it or something? No swings for me in anything right now that are long term. Anything I swing, guys, is for like within a week to a week and a half is like my time horizon, right? And it's got to be in a sector where the money's rotating in. It's got to be a sector that's showing strength. It cannot be a chart that looks like this. Now, is there a day trade? Possibly. Maybe a flush down to these this 160 area would have my interest. But again, this type of chart, I'd much rather just short the pops back. Like if we spiked back into 217, I'd rather fade this. Hope that makes sense. Yogi says, oh, the light's in the way. Hold on a second, guys. Let me move this. All right. Yogi says FSR short around 11s. Probably like that one. I do. Yeah, and you guys can see what he's looking at, right? Already had some wicks up there. The volume's there, and one of the things. This reminds me. What was the chart I looked at that this reminds me of? Dude, there was a chart I looked at the other day that looks just like this, where it's just been unable to get these closes above these levels, and it's flirting with major breakdown, right? But yeah, I agree with that one on FSR, Yogs. Would you short DKNG? Yes. Yeah, this is like, so one of the funniest things, right, is if I go into my screeners in FinViz and I do the short pops back into the 20-day screen, 240 stocks, right? There's so many stocks where you can just take your pick. And obviously, not all of these have the right requirements for me, you know, like just because it's on this list doesn't mean it's something that I would trade. There's a lot of these on here that are, even though they trade over 2 million average volume, they're still not liquid enough, right? But it does make me laugh when I run this screener and it gives me 240 results. That says a lot. So Cristobal is asking, says GDX, should I short or buy? So one thing, guys, you have to understand is I can't tell you guys anything that's financial advice. Like, I can't tell you to short or buy anything. And gold is its own type of beast. So like if you want to trade GDX, you need to understand how to follow the commodities. I really don't feel comfortable giving anybody advice on trading anything that's gold, silver, oil. Like, you know, I'll trade the oil equity names, but this is an ETF, right? So I'm not going to give you guys too much of an opinion on this. Like, just the only thing I will say is if you were to trade something like this, make sure you understand how to manage risk, right? Like, I actually feel like silly saying this because I did tell you guys about Boyle a few weeks ago, right? When we had this big blow off top and we got the move, right? And it gave another blow off top, and you may have another fade coming on natty gas. But again, these are the kinds of things where they're dangerous. These are absolutely dangerous things to be trading if you don't know what you're doing. And so you must have really sound risk management in order to get involved in these kinds of things. So GDX fits perfectly in with those. And yeah, I'm not really going to tell you whether you should short or buy that. All right, guys. That looks like I caught up on the questions. I appreciate you guys taking time out of Mother's Day to come over here and talk shop a little bit. But like I said, focus on the things that matter. Stop worrying about all the small stuff and getting, you know, just tunnel vision with the markets. Like, you guys have to peel away from the screens. Go find something that fulfills you and makes you feel, you know, happiness and makes you feel like you're progressing in life and you're doing something worth it. And I'm telling you, when you do that and you find that kind of happiness, it translates to your work, right? So you will trade better when you have more stuff going on in your life that gives you fulfillment. That being said, guys, I will see you all tomorrow morning at the market. If you're in TT, I'll see you guys on the live stream. I'll be calling out my trades. If you guys are not part of True Trader and you would like to check it out, there is a 5-day trial. It's only $30. If you want to be a member, it's only $100 a month, guys. Honestly, you get way more value than that, and I might be very biased because yes, I'm a moderator over there, but guys, you got to invest in yourselves. I'll see you guys at the market. I hope you trade well. I hope everybody has a great week. Enjoy the rest of your weekend. Give your moms a hug. Bye.